So you think you know what gets a company funded? You know, a killer product, a massive market? Well, what if I told you we've been focusing on the wrong things all along? We're going to dive in and uncover what really makes an investor pull out their checkbook.
This is it. This is the core question. And it's not a trick one, I promise. The answer isn't what you'll find in most business textbooks, but it's the pattern that time and time again separates the founders who get funded from those who just don't.
And there it is. It's not about having the most mind-blowing tech. It's not about that giant total addressable market, or TAM. It's not even about having the slickest pitch deck. The single biggest factor is familiarity. Yeah, I know, it sounds almost too simple, but stick with me, because understanding this one word can completely change how you approach fundraising.
Okay, so to really get why familiarity is so incredibly powerful, we have to get inside an investor's head. We got to look at the psychology behind writing that check. And you'll see it has a lot less to do with spreadsheets and a whole lot more to do with trust.
So what are we even talking about when we say familiarity? Look, it's not just about an investor having heard your name once. It's a state of mind. It's a place you get to through repeated, high-quality exposure to your company long before you ever ask for that formal pitch meeting.
And this is where it all clicks. The source material is crystal clear on this. Investors make these huge decisions based on trust. And where does that trust come from? Well, it's a direct result of that repeated, high-quality exposure we just talked about. It's not magic, it's just mechanics.
All right, this is where the rubber really meets the road. Let's compare two totally different scenarios, the cold pitch versus the familiar pitch. Trust me, it's a tale of two completely different meetings. So first, just imagine this. You walk into a meeting as a total stranger. The investor has zero context. They've never seen your logo, never heard your name, nothing. In that room, you're not just fighting for their money, you're fighting for their basic attention. You have to build everything from scratch.
And here's the difference laid out side by side. The cold pitch, it's a constant uphill battle. You're trying to build trust from absolute zero in 60 minutes or less. But the familiar pitch, that's a whole different ballgame. The conversation starts with context. You're not there to introduce a new idea. You're there to confirm something they already suspect might be a huge opportunity. The whole vibe just shifts from persuasion to validation.
Now, let's picture another world. The investor's already seen you featured in an industry report. They saw your LinkedIn post about that awesome key hire you just made. They've even seen a little briefing doc with your growth data. When you walk into that room, you're not an introduction. You're the main event they've been waiting to see.
So the most important point here is that this requires a huge shift in thinking. We have to stop seeing fundraising as this one-time thing, a single meeting, a single pitch, and start treating it for what it actually is, a long-term campaign.
And any good campaign has a playbook, right? First, you just get seen. Maybe it's a feature in an industry report. Then, you start to build some buzz, sharing updates like a key hire. After that, you show them the proof, real data on your growth. And only then, after all that groundwork is laid, do you have the meeting, where your only job is to confirm the awesome story they've already been following.
This basically means that the old build it and they will come fantasy is officially dead. The new model, the one that actually works, is build it, sure, but then you've got to broadcast it and make damn sure they know exactly who you are before you ever ask for that meeting. You have to show up already familiar.
So as we start to wrap this up, the core message couldn't be simpler. In the world of fundraising, you absolutely, positively cannot afford to be a stranger.
And why is this so critical right now? Because the market is waking up. You can feel it. The appetite for deals is coming back. But let's be clear, that capital isn't going to be spread around equally. It's going to flow to the founders who understand this game of familiarity.
The source really puts a fine point on it with this quote. This isn't just a nice idea, it's an urgent strategy. If a capital raise is on your horizon for the next couple of years, your campaign to build familiarity needs to start like yesterday.
So I'll leave you with this one question to really think about for your own company. When it's your turn, when you finally walk into that room, what are you going to be? A cold introduction, fighting for every second of attention? Or a warm confirmation of an opportunity they've been excited about for months? The choice is entirely up to you.